Hey, welcome back to the Leverage Living Podcast. We live every night. It's a Friday, and every morning it's a Monday. It's our Halloween episode today. See my pumpkins behind me here. Carved a couple last night. Ryan, what are you drinking today?
Okay, so today I'm going with bourbon. I chose to go with that genre of intoxicant due to the week that we've had, and it's a bottle that I thought was very fitting. You can see it's Larceny Bourbon. Now, before I get into the taste and the flavor and how it affects your palate, I want to talk a little bit about the word larceny. So this word larceny is what reminded me of this last week, and it's a word from I think the late 15th century.
Okay.
And it's a Latin derivative, obviously, but the foundation of the word alludes to robber or mercenary soldier, and that's how I felt the market was to my portfolio this week.
Likewise.
You know, I thought I was acting like a mercenary soldier and or robber.
I like that. That's a good
Yeah.
little comparison there.
So that's why we have larceny today, and let's give you a taste. Well, outside of it being 7:30 in the morning right now on Saturday, just kidding.
Wait, we live every day like it's a Monday, Ryan.
It's a nice sipping bourbon. It has a pretty full flavor, and as you'd expect, an oaky kick that pairs well with some of the sweetness it has. So overall, it's a pretty robust bourbon that you could probably drink anytime and not get bored with. And if you buy a bottle like this from Costco, this is really good for weathering weeks like this with the portfolio. This is probably this could last you a whole Monday evening. So you might want to have a couple on tap for next Tuesday.
Yeah. And then the 79 days following that until the inauguration.
Yeah, true. So that's what I have in the glass today. How about yourself, Bryce? What are you drinking?
I'm going to keep it short and sweet. This is a Maker's Mark. I've had it on this channel before. It's a favorite of mine. It's got a caramel vanilla smell to it, which I like. It's a really good combo. Let me give it a taste. Hits right at the front of the palate, soft and smooth. Long warmth down the trachea. You can feel that one. And I mean, whether whiskey's your taste or not, it's a distinctive one. Oof.
Okay.
It's strong, but she lands nice. So let's talk about what the market did last week. No surprise, all three markets were down. The S&P 500, the Dow, and the NASDAQ all posted declines of around 6%. The coronavirus cases rising, economic and political uncertainty obviously rising together. So I think if Biden gets elected, we're going to see a stimulus package come in pretty quickly thereafter. The Democrats get in the House. But yeah, like I said, all three of the major stock market exchanges, they're down for the month of October. The Dow dropped nearly 5%, S&P 3%, and then the NASDAQ lost 2%. But the quarterly earnings for Q3 were actually pretty good.
Yeah.
We saw a number of firms beat expectations near record level on Friday. According to that FactSet website that we look at, 86% of the companies had reported the third quarter earnings exceeded expectations, which that surprised me a little bit. And then compared to the last 5 years, only 73% had exceeded earnings. So
yeah,
that's an interesting little turn there.
And I think that's I think there's a couple things to that. One, obviously, analysts adjusted their expectations for this last quarter with COVID in mind. So it was pleasant to see that even though maybe some of the estimates were more softball figures than they're used to, companies did perform better. And another thing, and I'll populate this on the screen too, there's an interesting divergence in a couple of the companies within the S&P 500. So when you look at revenue growth year over year, you have some winners, and you can see these now in the video: Tesla, Amazon, Netflix, Facebook, Google, so on and so forth. So these companies are growing revenue even amidst even during the COVID pandemic. I've had too much larceny. It's stealing my vocabulary now. So
whiskey will do that to you, trust me.
So when you compare some of these high growth companies to the S&P 500 index itself, that index actually is probably more representative of companies as a whole, with revenue growth down 5% year over year. So it shows that there's kind of two stories playing out here, the haves and the have-nots, in terms of which business models are faring well with the pandemic. And to expand and talk a little bit more about the economy, we did get GDP numbers last week, and it was a really great number. So it's 33% growth for the third quarter compared to about a 31.5% drop for the quarter before. So it was nice to see the rebound. When I see these figures, I always hope people know how to do math, and you realize that even though we did a 33% growth in the last quarter, that's not larger than our 31% drop from a absolute value number, but still the right direction to move. And
hopefully in the coming months, we can see that number increase. Hopefully a vaccine comes. And I mean, have you heard any news about anything with the vaccine over the last week?
Probably
Crossed my
desk.
desk.
Nothing substantially significant, but there's still some front runners out there. So hopefully, within the next month or two, I know a lot of companies like Moderna's one. I mean, they're producing hundreds of millions of doses. So once the green light's given, we can get those out as soon as possible. And I think there's a couple different thoughts about a distribution plan, but
it seems to me that, I mean, we've been hearing about these companies coming out with vaccines going into trial 3, whatever, since July. It seems to me it's like almost like a marketing ploy to get people to jump into your company, raise the stock price in the short term. And I mean, granted, they are coming out, and I'm sure everybody's working super hard at it, but it's like, where are the results? And I know they're pushing a vaccine. They usually take 18 months, but when it comes to a pandemic, I don't know. They gotta get that out there.
Yeah, they're definitely working with a sense of urgency, and I'm sure there's some excitement to post exciting, I guess, benchmarks during the trials to move the stock price. But to pivot and talk a little bit about so why are they producing these vaccines? Obviously, COVID's still a very relevant thing. So I'll populate a chart right now just showing our number of positive cases per day is hitting new records. And I think it's hard not to see that when you look in the news. It's everywhere. So I also looked into the numbers a little bit because I do think it's different than it was in March. So part of the reason definitely is, we are doing, I think, almost a million in tests per day. So we've definitely increased our capability to do testing, which is great and very necessary to help control this. But so some basically statistics on that. There's about a 28% increase in testing that we've seen, but there's a 78% increase in cases. So cases are still outpacing the testing increases. So that part's not good, and we've
seen a flu season emerging as well to see what see kind of the in and outs of how cases go up versus, because if people are feeling crappy, they're going to go get a test. So, I mean, you're going to increase tests that way. And yeah, it's going to be interesting. And obviously we're seeing the cases grow exponentially, like you said. And they predicted the exact same thing. Once fall hits and the weather gets colder, we're going to see that rise.
It certainly seems to move, in a wave-like capacity. And I would assume part of that is once you see these rapid increases, people maybe start adjusting their behaviors a little bit, just because there's a little bit more uncertainty out there. So hopefully we're nearing the peak, but we'll see. So moving on from that, just a couple things, and I'll populate this on the screen so you can read it yourself. But the week ahead, there's a lot of things going on, but there's one that everyone's going to be looking at, and that's Tuesday. So we'll see what happens Tuesday, but I think overall for the markets, the best thing would be whether it's the red or the blue candidate. I hope it's not Kanye West, but If it's red or blue, let's just hope it's, it's a clear and concise thing, and there's not some deliberation that has to drag out for months and a back and forth. I think the market likes certainty. So whether that's blue or red, the market wants certainty. So
And
let's hope
one more thing to add to that. Over the past, I think it was since 1970, the week prior to the election has always been the week of highest volatility in the markets.
Yeah.
So we saw some of that. So I think, this is obviously a way different year than usual with the mail-in ballots. There's 79 days between Tuesday and the inauguration date. So we might not know who's for sure going to be taking the White House until a week before. Who knows?
Yeah.
How efficient are they going to be counting these ballots?
Yeah, that would be.
If it's based on what we've seen in stimulus talks, it's not going to be a quick process.
Exactly.
So I don't know. It's going to be the 79 days of hell. See what happens. Not to be too crazy about it, but
no, that's got to be prepared for anything.
Yeah. Hopefully we see it go up.
Yeah. So why don't you tell us about the asset class that actually moved up last week?
Oh, yes. Our Bitcoin up 5.3% over the past week. We're seeing a huge move in the digital currency. PayPal's taking it over. Squarespace taking it over. Cash App. When the money printer gets turned on by Powell, the value of the fiat currency is going to go down. That's just simple supply and demand.
Yep.
Learned that in high school economics right there. You're in Bitcoin, aren't you, Ryan?
Yeah. Not much over, one coin. So it's not, I wish I had a larger exposure. I did start buying some more a couple weeks ago, and we, mentioned it as an actionable trade idea. But I think that crypto will probably be a pretty good place for the next 3 months. And I've seen, well, with any class, when you see prices start moving, you see new price targets. So I've seen several people putting end of year price targets on Bitcoin at about $25,000. So, which it's been in that territory before. So we'll see.
And then they have the halvening that occurs every 4 years.
Yeah.
So the price of Bitcoin, essentially, they get decreased by half. So like we said, supply and demand, that should keep increasing the price points.
Yeah, they take supply.
We had that. Yep, we had the last one this May, beginning of May of 2020. So in 2024, whatever month it happens to be. And then they always see from prior years, they see the effects go in about 6 months after.
Yeah, little leg.
So, it's all positive news when it comes to the Bitcoin. I think that'll be a pretty safe one. And then in passing, last night I was listening to news, and have you seen that the digital currency for the yen?
No.
China wants to go all digital, and they're calling it the digital yen is the name they have for it so far, which is not creative whatsoever. If it gets to be, I don't know, they're talking about it. Hey, it's a good way to be tracked in all your purchases, but I don't know. Everything's going to go digital at some point. It's too efficient.
It'll be interesting to see the evolution. Obviously we've had the history of our economy as we're familiar with it is very, very short. So,
yeah.
And there has been an evolution of a currency is just a medium of exchange. So It'll be interesting to see that journey progress as there's innovation in every space. So, yeah.
People want to save time, that saves time. And then I just want to talk about for SPACs this week, nothing crazy. Fisker got his name changed. They completed the merger. They're now FSR, I believe.
So it's another.
And then on Friday.
I was just going to say
Go ahead. What?
With Fisker, another electric vehicle company with no sales and no product on the road.
Yep. On Friday, their stock price rose 15.2%.
Of course it did.
So it's now, yeah, what do you know? But, it's, you see Nikola, they're at 18. Helion is at 18. Nikola might be an interesting one at this point to be selling December puts on, because that's when they're having their Nikola day.
Oh, sure.
That's when they're gonna show the Badger off. They're gonna have a huge show.
Yeah.
Obviously, Trevor Milton isn't in the picture anymore, but once they if they can do what they say they're gonna do, it's gonna be a good company.
Yeah.
And Helion, who knows what's going on with that? Love the idea, love Thomas Healy, but time will tell, and that's all I can say on at this point. Let's see. Do you want to touch on NAV? I know we talked about it a little bit before. For the SPACs, it's Fisker is at like 10. It's trading at 10.08 or something right now. And before, you had your backup at 10 before the merger. If the merger didn't take place, you'd get your money back at $10 per share. So do you want to like touch on that a little bit?
Sure.
What it means?
So, a net asset value is a term that's been in the investing space forever. And I think you can, hopefully this would simplify it, but think about your own personal financial statement or personal financial situation. If you take all of your assets, so your tangible goods, your investments, your house, your car, subtract all the debt that you may have on those in terms of a personal loan, mortgage, tax liability, whatever that equals is, or whatever that summation is your net asset value. So that's the value of your assets net of any debt or liabilities you have. So with these SPACs, when they initially hit the market, they're shell companies. So they don't actually perform and generate cash flow. They're simply a trust with cash, potentially treasury bills in them. So the net asset value is the value of that cash, that trust value when the SPAC goes to try and find a company. So an interesting way to play these, and I think this is what Bryce and I have started to do more of, is when you have the initial launch, relatively safe time to place your capital, because you're buying near NAV, you're buying near the cash value. So you have a few months to see if there's an exciting announcement that Wall Street likes and the SPAC price goes up. It gets a little dicey after that exchange happens, or the merger officially happens. So you've seen that with a number of them.
A lot recently, almost all of them.
Velodyne, LiDAR, Tattooed Chef, Nikola obviously came down significantly from that. Helion. So the list goes on and on. But I think, if you understand the concept and learn more about how SPACs function as a structure, and you identify what the net asset value is, that's a very good piece of knowledge to have in making decisions. And after that merger is complete, the value of that company or the value of the new ticker post-merger is based on the company, not cash in a trust anymore. So
now you don't have a backup plan. Now it's just you're ready to go and you're in it.
Yep. So your floor doesn't exist anymore.
Do you want to hear my thesis on the SPACs right now?
Yeah, sure.
Have I told you? I don't think I've told you about this, but I think with people's mad money, their mad money, the money that they don't have in index funds, they've thrown into SPACs. And I think that they're pulling those out right now to keep in cash because of the implied volatility of the market.
Sure.
So I think that could be a possible reason why over the last couple, it hasn't even been, it's been about a month and a half that the SPAC market hasn't been what it was.
Yeah.
Beginning of this year. And then obviously we took out that sugar rush from the stimulus. That could be another thing too. That got a lot of investors going, including myself. I'm not going to lie to you about it. But I think with that mad money being taken out and put into cash for safety, I think that's a good, a fair thesis about what's been happening. Just my take. I don't know.
No, I think there's some credibility to that, and they're not immune from trading with the rest of the market, and you're starting to see, I think, people continue to rotate more to cash as volatility increases. So,
and then so I'm personally going to stick in them because I can see that long term, these are all pretty good companies with very good leadership. That's why we get in them.
sure.
For the leadership. People don't like to lose money, and people that are super smart at the top of the food chain don't often do. So let me hang on the coattails for a little bit. See what happens.
Yeah,
all right, and
good opportunities.
Go ahead. What'd you say?
Oh, I just said there can definitely be some good opportunities for emerging technologies or companies there. So
For sure, I agree. Let me talk about earnings for next week. November 2nd, 1st through the 5th, I think. So PayPal on Monday. That'll be an interesting one. Like I mentioned earlier, they're accepting Bitcoin. Waste management, everybody gets their garbage picked up. That's never going to go away. AMC, movie theaters, maybe not.
yep.
Anything big? Cisco Foods on Tuesday.
I think
there.
A couple of the high beta ones, the ones that may move a lot. Wayfair is coming up Tuesday. Zynga usually can move quite a bit. Roku, obviously, a lot of implied volatility at that one. It'll be interesting to see GM's earnings because Ford actually reported really good earnings and high demand for some of their larger vehicles. So, and Peloton. So we'll see if people are still, keeping the curtains open so the neighbor can see the new spin bike when they're.
And then Thursday we also have AstraZeneca and Regeneron in the vaccine hunt. So it'll be interesting to see, and we spoke about it a little bit earlier, to see how much headway they're making in protecting all of us from this pandemic. But we also have Square and Roku. Roku has been a popular one lately. I think that's a big holding in the QQQJ.
Yeah.
So that'll be an interesting one. I've been looking more into the QQQJ index fund, and I think I'm going to add to that in the upcoming weeks. It's down quite a bit, and it just started trading on October 13th-ish. Don't quote me, but it's somewhere around there. It's new. So Friday, nothing crazy. You guys can see it right there. Viacom, CBS, football season, And by the way, if you're sensing a tension in the air, Ryan and I play each other this week in fantasy football. That's where that's stemming from.
I think a lot of the viewers are probably thinking, gosh, I hope Bryce is better at fantasy football than he is at podcasting. So, that was kind of my thought with this episode. So
yeah, they wouldn't be wrong. And I hope so too. So much.
The only difference with podcasting is, you don't have Derrick Henry to prop you up. So I'm the workhorse in this.
That's why I got you. That's what I got you.
I'm the Derrick Henry of Leverage Living podcast.
Hey, you have Elvin Kamara, so you can just
So I wanted to talk, we'll transition from earnings, and just a lot of the theme, obviously, of this episode, which I think is warranted, is around a volatile era in investing and the election coming up. So one thing I want to share with everybody, and I touched on this in a prior episode, but don't get too, tunnel vision in terms of your political party. History will show you that if you were to go to cash, whether it's Republican or Democrat, that's not going to bode well for you in most administrations. So you got to think to yourself, even if you don't agree with certain economic policies or ideologies of a certain candidate, where else are people going to put money for return? Because that is a problem that always needs a solution. And that problem will still exist no matter if it's Biden or Trump at the helm. So, you can go into a savings account and lose money to inflation, or you can participate in the largest investing market there is and the most liquid, which is the stock market. So there's certainly going to be ups and downs, but it's not about timing the market, it's time in the market. And history shows that. So one thing that Bryce and I do, and we discuss pretty frequently, I keep one just on the notes app on my phone, but it's your stock grocery list. So I keep two different lists, one for growth and one for yield. So as volatility picks up, if we see another sharp drawdown, I have a plan in place that I'm ready to execute on, so to speak, and start picking up these companies. So you got to really think about it as you're buying a company, and think about it like any other commodity you might buy. So, Bryce said his favorite sports car is a Mustang. So if Mustang says, hey, we're going to drop the price of our vehicle by 20%, and by the way, we just increased horsepower by 30%, we increase safety, we increase fuel mileage, it's kind of like, okay, so if I liked it at the prior price and now all the metrics are improving and it's cheaper, why am I not buying it now?
Let me buy them in bulk.
Yeah, buy the whole lot. So that philosophy, as simple as it might sound, I hope it sounds, will do really well in investing. So I want to talk about a couple companies that we own or that we like, and they also just report earnings. So one of the companies that it's one of my biggest holdings is called Digital Turbine. So it's probably a small to mid cap tech company in the mobile space. So they just reported earnings last week, and actually they annihilated their earnings estimate. So the revenue beat the consensus mark by 16%, came ahead of guidance. It's over 71 million. Their top line growth, which is their revenue growth, increased 116% year over year. So
that makes Ryan a happy boy.
Yes, I mean, when you see those kind of growth metrics on a well-established company of growing top line over 100% a year, that's a pretty good place to be. Obviously, they added, so like I said, they're in the mobile app space. They added 60 million devices in the quarter, and that growth is about 60% year over year. So they have an international footprint of customers, and they keep expanding. So when you see that company report earnings like that, it's definitely a reinforcement of why you like them, why you hold them. But due to the nature of the market, it was kind of interesting watching them after hours. I think they're up at one point about 10%, and then they closed the next day down 10%. So volatility is the nature of the beast, but it went on sale
especially.
Yeah. So the Mustang scenario that I described occurred the day after earnings.
I like that. Another one, Abbvie.
Yeah.
One to put in the list or in the cart too. Grab it off the shelf. That's a biopharmaceutical company. For those of you that don't know, healthcare related. They raised their full year outlook and boosted the dividend by 10% to an already pretty substantial dividend.
Yeah.
Their net income rose 2.3 billion. That equaled out to be about $1.29 per share.
I wanted to say a couple things about Abbvie, because I said, we do a growth and an income list, and this is one of the top ones on our income list. It produces a significant dividend, and as you can tell from this prior quarter's earnings, it's a safe dividend. And Bryce mentioned revenue is up 52%. Well, 52% of a grape is still pretty small, but this is 52% of growth to 12.9 billion in a quarter. So that's 52% of a watermelon in my book. So when you see those type of numbers and you realize that, okay, Abbvie year to date is down about 9%, when they're growing net income, they're growing revenue, they're increasing their dividend, I think I'm buying more.
Yeah. It's a good company to look at for sure.
Yeah.
Shopify also is another one to put on the grocery list. Revenue of 767 million, up 96% from a year earlier.
Little tick.
Yeah, you'll take that. And ahead of the consensus, the Wall Street analysts of 663 million. So,
100 million above.
Yeah, substantial increase. Merchant Solutions revenue jumped 132%, 522 million, driven by the growth of the gross merchandise. Or GMV. That's another definition we could go over. But the adjusted profits were $1.13 per share, about twice the Wall Street consensus forecast of 53 cents. So that math adds up.
Yeah, and what was funny about this one too, just like Digital Turbine, is the stock sold off after these earnings. So it's down a fair amount from its all-time high, but this is another one as we see volatility continue to increase to keep an eye on, because the fundamentals of the company are only getting better. So
people are nervous. They see
Yeah.
that positive and they want to take their profits and get into a little bit more cash, I think.
Yeah, it's kind of funny when you think of, a company like Shopify, 96% revenue growth year over year. Their merchant services revenue, which is their highest segment of revenue, up 132%. What would have made the stock go up the next day? I mean, well, what are you looking for?
Exactly. I think it's like you said earlier, you mentioned tunnel vision, and that's exactly what it is.
Yeah. So it's
seeing a lot of negatives. They see a little green thing next to their stock and they get it into cash.
Yeah.
Because it's just going to keep going down. Apparently, it's not going to happen. It's
so
over time.
I think those were a couple good examples of growth and income companies that reported stellar earnings, are really financially stable, that you want to look at acquiring as the market continues to soften, if that's the course it follows. I also want to talk about, this is a bit of a shift, but it relates to what Bryce and I were talking about earlier in regards to net asset value. So this is where I think this type of economic environment is where I think you can really be smart with some of these SPACs. Bryce used to call them SPACs, but
our devoted listeners know that that's not true.
So I'll talk through this scenario. So if you're familiar with Shamat Papalatia, I hope I'm not butchering the name too bad, but
heard of him.
We call him the Sultan of SPACs. So he reserved ticker IPOA through IPOZ, and he's already successfully found
Z, yes.
Yeah, IPOA through Z. And I think he's already identified 3 companies so far that he's taken.
A, B, and C, yep.
Yeah, A, B, and C. So C is Clover Health, IPOC. And at one point, the SPAC was up quite a bit on the news of the merger, of the pending merger. But now IPOC has a net asset value of $10 a share. I purchased quite a bit more last week at $9.98. So
you win 2 cents per share.
Yeah. A common thing I say in investing is, and primarily related to real estate, is you make your money when you buy. That was exactly the case here. So I made a guaranteed 2 cents a share. And why I say guaranteed, for those who haven't participated in a SPAC before, is there's always a vote essentially to approve the merger. And around that time, you have the option, if you don't want to move forward with the merger of the company, you can have your shares redeemed at the net asset value. So that option comes with all of these, and it doesn't matter if IPOC is trading at $7 a share, you have the option to redeem at 10. So the way I look at this,
that's a good place to park your money in.
Yeah, it's below its. You get paid to get in right now. It has a floor of $10 a share. The way I look at it is you get a free 2 to 3 month call option on Clover Health, or if they terminate and identify another target, or the SPAC market in itself just happens to rally, we get stimulus, whatever, you're going to ride the upside. You have no downside. I want to talk about one more of those. It's called Galileo Acquisition Corp. So they actually are, they looked through their telescope and they found a company called Elite Model World.
I get it. I got it. I see what you did there.
It's called Elite Model World. And I'm just going to say this. Who cares what the company does? I don't even love the company. I think it manages models and social media influencers, which maybe that's a good space. I didn't look much into it. But what I can tell you is I purchased some at $9.79. The net asset value is $10.08. So you can earn that spread, which if you look at a 3 to 4 month period, that's about a 10% internal rate of return with essentially no risk. So these are a couple places when you can identify, it's called SPAC arbitrage, where you can buy mispriced assets such as SPACs where you can reduce your risk level down to zero, but also have potential significant upside, which with the uncertainty we have likely for the fourth quarter, great place to be.
Yeah, that's a lot of good points you made there. And another one I want to talk about for SPACs is selling calls. Because like we said, the SPAC market is down. And for those of you who have 100 shares of Nikola, Hyliion, these have already merged, but anything like IPO,
Back energy.
Switchback, yes, SB is a good one. You've seen the decrease in price, and when you sell a call, that's you're bearish, right? So if you have 100 shares, you're able to sell a call for a premium. That's free money, assuming that the price won't reach back to where your strike price is what it's called. Assuming it won't reach that strike price by your set date. You can go a week in advance, you can go a month, you can go years in advance if you want. But you're just assuming that it won't reach that price, and if it doesn't, you're taking that premium home, no questions asked.
Yeah, so
that's a good hedge for these uncertain times like this.
That's exactly what I was going to say, and that's part of what we did. And when I say this, I'm not saying, oh, we didn't notice any pain the last 2 weeks. We sold calls on everything. No, the last 2 weeks were larceny, but I did sell, and I know you sold some calls on positions at decent out of the money premium. So you have a little buffer on the downside, and if you can participate in less of the downside but all the upside, you're going to do really well in investing.
Yep, and it's long term. We're thinking long term, week by week, whatever. Stuff happens. Long term, you see
brick by brick strategy.
There's a lot of this, but it's doing this on the way up. So you take what you can get when you can get it. Let's see. This episode's getting pretty long. Listener questions, let's go to those. We had 2 this week. What are you buying if the administration stays in office?
Okay.
And then the second one was, what are you doing if there's a change? I think we touched on that pretty well already.
Yeah.
It doesn't really matter. I mean, if Biden might legalize marijuana, he's talked about that. So canopy growth, Aurora cannabis, ETF, THCX might be a good one.
Yeah.
That's the whole cannabis market. Do you have any that, I mean, hopefully
I think from a thematic perspective, you look at regulation, tax policy. Biden made some rather poor comments about the energy industry. So if it goes blue, likely some weakness there. So I think you can definitely identify, if there were to be an administration change, what may do well and what may do better, what may do poorly, just based on your prediction for how regulations or taxation could change. So, yeah. But there could be something we're missing, and I'd be curious to know if anyone else has a strategy that would capitalize really well on one or the other, or potentially both. So,
yep, wind kills birds.
Exactly. Well,
so funny.
Let's wrap her up. Have a happy Halloween.
Happy Halloween, Ryan. Cheers, buddy.
Cheers.